Okay, so let's do a quick video on natural gas. I said I would, so here we go. I did promise. This is the weekly chart of the Henry Hub futures price, and you can see we're at the bottom of this channel. This is a long-term channel going all the way back to 2022. You can see on several occasions it acted as support and resistance. We eventually fell right through it, falling down through major support over here. And we ended up right at the bottom. And months later, this is where this channel ends up. Look how we touched it from the underside once we got down to the $2 level and came back up to $3. Not only was $3 a big round number, but it's also the underside of this falling channel. Once we broke inside, we got up to the top of the channel at around about $3.80. That was the high that we reached recently and in 2023. We then fell back down to the bottom at $2.20, back up to the top at $3.15, and back down to the bottom at around about $2. That's where we are right now. Now, there's been a lot of friction and panic in natural gas forums on X and on YouTube, and people just don't seem to understand that natural gas spends most of its time in the $2 to $4 region. If I put the NYMEX chart on and went much further back, you'd see that this band between about $2 and $3.50 is where natural gas does spend most of its time. We're just at the bottom of that range now. So look where we are now, and you can see where the support and resistance lines are, the major ones at around about $5 above us. I don't think it's likely that we'll get there where that question mark is, as I said in my last video, but there is always a possibility. If there is a supply shock caused by geopolitical events or some other event, it's possible that natural gas could reach up into the $5 region. For now, however, I'm going to focus on the $2 to $3.80 level. Coincidentally, that purple line there is also the 200-week moving average, and that just happens to be at 380 as well. So now we know we're at the bottom of the range or very close to it. There is further support below us at $1.50-ish, and we have to keep that in mind. We also have to bear in mind that it's possible, although unlikely, we could get up to $5. In general, though, the $2 to $4 range is the one that I'm going to be focusing on for now. Let's zoom into the day chart. You can see that this is not only the channel bottom, which we pointed out earlier, it's also a daily support level. And we're trying to form a reversal there. That's my average price, $2.09, but I only have a 35% position on this. I'm willing to add if we drop down below $2 into the 190s like we have before in 2023. And I'm willing to add a little bit more on if we dip even further than that down to about 180, potentially down to 150. But I don't think that's the most likely scenario. Now that we've looked at the day chart, let's go into the 4-hour chart. That's our first trade entry, and we've just put another little bit on at about $2.08. Let's make a copy of that right now, and that was the beginning of this 4-hour period. One of the reasons why I've taken this trade is because we're very close to the $2 level. We're close to the bottom of the channel. And if you zoom very closely in on the 4-hour chart, you can see a tiny little one up, one down candle reversal pattern there. That's where we got in at the bottom of this candle. We got in over there as well. We now have a 35% position, and the average price is $2.09. Quickly looking at the 1-hour chart, that was our last tranche that we added there. And if I zoom out, you can see our previous one there. So our average long price is basically slap in the middle between these two green arrows in the middle here at around about $2.09. Well, take care. Have a great trading day. If you enjoyed this, please subscribe and give it a thumbs up, and I'll see you in the next video.